Welcome back to ET Now Insights. Well, Bajaj Finance is a counter that is reeling under selling pressure today and in line with the sector's muted outlook this quarter. And most of the players have flagged caution over stress in the rural loan book and weighed down further due to the Karnataka ordinance. My colleague Varun is now joining us with the roundup of this quarter and what is the outlook for the NBFC sector. Varun, give us the lowdown and all that you've got.
Definitely. So it has been very interesting quarter for the NBFCs because see what happens is NBFCs or banks normally they give their quarterly updates in the start of the month. So when we got the quarterly updates for this NBFCs in the start of the month, everyone thought that yes, it's going to be a good quarter for these NBFCs because the overall growth rate was good. And that is what happened. If you look at the overall results of majority of the NBFCs, may it be Bajaj Finance, may it be L&T Finance, may it be M&M Finance or Mass Finance, the overall net interest income growth has been very good in majority in double digit for Bajaj Finance and Mass Finance. For M&M Finance also it has been around 13%. Also the profit growth has been good for companies like Bajaj Finance and Mass Finance, but it has been at the lower end for L&T Finance and M&M Finance. If you look at the overall NPA numbers, the way NPA numbers have gone up for companies, for specifically for banks, that trend has not been seen in NBFCs. Also, if you look at the net interest margin, they have been up for majority of the NBFCs, the likes of L&T Finance, M&M Finance, Mass Finance. Majority of them have seen a rise in overall net interest margin. But the major catch over here was the commentary of the management, because majority of the management, they have highlighted several issues. For example, Bajaj Finance has said that there are issues with the MSME segment and also the credit cost is up, the consumer leverage, that remains a point of concern still. Also, other than Bajaj Finance, there were NBFCs who have highlighted pain in the overall vehicle segment financing. Microfinance, even that is not totally out of pain. Only the personal segment, personal finance segment, that is one of the segment that has seen some uptake in majority of the NBFCs. But other than that, if you look, there are several sectors who have been a pain point for some of the companies, especially if you look the MSME segment that has been emerged as a new pain point, and also MFI is under pain, and vehicle financing. Commercial vehicle was one which was seeing pain earlier, but now the pain has also got into two-wheeler, three-wheeler and other passenger vehicle segment as well. So there are several segments of the overall NBFCs which are actually seeing a lot of pressure now, and that is what has come out from the overall commentary of the management. But let's look forward and actually speak with Mr. Raman Aggarwal, the CEO of FIDC, on the overall results of NBFC sector. Mr. Aggarwal, good afternoon and welcome to ET Now. Sir, more than numbers, this time it was the management commentary which has actually shaken the overall confidence of the investors. How do you see that? Because many of them have highlighted actually pain, may it be in the MSME, may it be in the vehicle finance segment. So how do you see the overall commentary of this management?
Thank you for having me. See, I won't read much into that pain, so-called pain as commented by the management committee, management briefings. I would put it as more of being a slightly cautionary approach and a conservative approach. Because if you look at the actual numbers, the numbers speak for themselves. And let me draw your attention to some very important observations which none other than the Honorable Finance Minister made recently in an NBFC symposium organized by Finance Ministry, where she clearly spoke very high about the sector, the way NBFC sector has grown and has doubled the credit growth in the last 4 years. So I think all this, what you are talking about, is more of a cautionary. These are cyclical or seasonal impacts which come out. Let us also not forget that Q1, while the numbers may say so, but Q1 also saw a very troubled times when we had a lot of geopolitical scenarios developing both internationally and at the domestic front also. There was a brief period of immense tension across the border. So I think all in all, these are all one-off events which keep happening, and you see some changes here and there. Overall, if you look at inherent, the sector is very strong, well capitalized. I think time and again, RBI governor, even in the latest monetary policy, said so. So I don't see much reason for any cause of worry.
Mr. Aggarwal, okay, the numbers speak for themselves. That is great. But is it like we are waiting, or the industry is waiting to see one more quarter? If the pain persists, then we might see many of the companies cutting their guidance. Or do you expect the overall industry to do better in the second quarter of FY26?
So I would say it's a mix of both. See, because anything to really crystallize and say that, okay, there is some genuine pain, you need to at least give some time. If the so-called pain you see keep continuing for at least 4 to 5 months, then is when you can say, okay, there is some reason to believe that there is some cause for worry. Otherwise, as I said, there are a lot of things in a fast developing world, a lot of things keep changing and things keep happening. So that is where, and yes, the management also wants to play a cautionary approach, and say that, okay, let's not say that, everything is going great guns. It's always better to play caution. But let us not forget one aspect, that any small change which happens or any small event that happens nationally, globally or regionally or even locally, it is always the bottom of the pyramid segment of the society that gets affected the most. And if you look at the so-called pain, that is where you are actually seeing some stress, whether it's the microfinance and as you mentioned, whether it's the consumer loan segment, that is where some pain is being felt, or even two-wheeler segment, if you say. So that is actually the bottom of the pyramid. But again, let me reiterate that this I see as more of a temporary phenomena, and going ahead, I think things will only improve.
Okay, Mr. Aggarwal, but how do you read this when a company like Bajaj Finance says that out of the 17 industry they cater to, 13 are actually seeing a slowdown, and around 3 they are actually showing contraction? What indication does this give you? Are we ready for some more pain, especially in the MSME segment? And is the pain from the MFI segment actually creating a problem for other segments as well?
See, I think to answer your question first, I don't think that MFI segment pain has that kind of a contagion effect to so-called that the other portfolios, because that is a very different phenomena and different kind of lending that happens MFI if you look at microfinancing as compared to the other funding. So I don't see a connection there, because that is the reason we all know it's been going for some time, and now in fact it's on the correction path. As far as the Bajaj Finance point is concerned, I think there again, as we said, it's more to do with the actual consumption, because if you look at Bajaj Finance portfolio is tremendously retail, actually catering to that bottom of the pyramid. And as we said, that was some segment which did suffer, with not actually suffer, but more of a, I would say, doubts created, apprehensions created because of the prevailing scenario. I don't see any reason going ahead why things should not improve, because now we have peace on the border, we have things progressing well, and with all the recent steps announced by RBI, both in terms of rate cuts and the liquidity being pumped into the system, I only see things improving going ahead.
Mr. Aggarwal, so do you see the transition yet to come for the rate cuts that have happened, the 100 basis point rate cut?
Exactly. See, let's appreciate, Varun, because when it comes to NBFCs, our borrowings from banks, it is only when the banks pass on that interest rate benefits to the NBFCs and how much do they pass is what we assume. So that is still in the transition phase, and the actual impact is yet to come for that.
Okay, great. Just wanted to understand one last question, Mr. Aggarwal, a little bit of micro level, because there were several issues in several states. For example, like Karnataka and Telangana, and if you look at the north side, there were microfinance issues in states like Bihar and Uttar Pradesh. So how do you see them carving out going ahead? Will this actually create problems for companies operating in the states?
See, I think I would say the real pain, the worst is over, if I can say that, use that term. Because I think, yes, there were concerns, as you mentioned, in certain states, some driven by the political developments and some the actual pain, and in some cases even over leveraging was a point which came up. So I think with RBI also pitching in and sounding a word of caution, and we saw the MFI segment and the FROs for the MFI segment also sounding a word of caution to the players, things are on the corrective path now.
Okay, so things are on a corrective path, and let's see in coming quarters if we see some uptake in specifically this NBFC names, and let's see that let's wait and watch and see whether things actually improve in coming quarters as well. Mr. Aggarwal, thank you very much for taking your time out and speaking to us on all this important topic, that is the NBFCs. That is what we had in the ET Now Insight. But yes, there is more news, more action to come. Stay tuned with ET Now.